All right, let's go out to the newsroom. Kevin Hincks has got another. I don't know if it's an unlikely winner, Kevin, but it sure is a pretty interesting comeback story here. General Motors, not where it was this morning, right? We had an explosive move this morning. It squeezed off a little bit, but still an almost 10% rally in GM.
Yeah, 9.2% as we get late in the day here, Oliver. And, you know, the headlines are very good news, right? An accelerated share repurchase of $10 billion, a 33% increase in the dividend. Now, when you get into those numbers, it's from 9 cents to 12 cents. And if you think about General Motors as a long-term investment, once the stock reopened in November of 2010, Oliver, it opened at $35. It's now, because of the news today, just getting back up over $31. Now, they announced some good things today, right? More dividend, more stock repurchase, but they also announced a $1.1 billion charge from lower production during the UAW strike and dramatic reduction in spending via the Cruise self-driving unit. I mean, not, you know, slightly reduced spending, massively reduced spending. After it ran into some troubles, Oliver, California operators suspended their operating license last month. Mary Barra came out and said what Cruise has accomplished in the last several years since acquiring the company is remarkable. I don't know if remarkable is the right phrase, Oliver, but this is more what I feel is the big automakers backing off of their plans for EVs. She said she's very disappointed in the EV production this year, but promises that next year they'll have more EV production and better margins. But Oliver, these promises by the big automakers for EV production and margin and sales continue to get pushed out into the future. Oliver, it's a cautionary tale by the big car makers as they try to push into EVs, and the numbers just aren't adding up, Oliver.
Well, the outstanding share math is adding up, even though it seems like they're aware of the missteps they've made. The $10 billion, buyback, basically like a quarter of where the actual market value was, is a pretty effective way to say I'm sorry. You know, but it also, I feel like, in the messaging today where we're talking about some of the less favorite tech companies leading now, there's just an optimism that seems to be enveloping across sectors now that includes a company like GM that was a laggard creatively, competitively, stock-wise, and had all these sort of inflationary risks built in with labor and labor costs. And now they're like, hey, we're so confident that the worst is past, we're going to buy back a quarter of our stock. It's kind of crazy.
Well, it's certainly a big number, not in reality, but in terms of the overall value of this company. It's a pretty big number. You're right. And they won't know the exact share count until they see the valuation, but this is certainly an aggressive move by General Motors to try and breathe some life into this stock that's currently trading just above a 4 price-earnings ratio, Oliver. So the question is, with the massive investments in EVs that simply aren't panning out as of yet, what does this company do to get back on the relevance map in terms of not only just auto dealers, but industrials in general, Oliver?
Absolutely. All right, Kevin, thanks for the story. Really interesting one today. A fascinating leadership across the S&P 500 today that's helping keep markets afloat and positive substantially, even with so many of the big mega cap tech companies down or flat on the day.